Hello everyone, good afternoon and welcome to today's Trading US Open live here at the Live Trade Room. Now today is Thursday the 20th of September and what we look to do is to become masters of price action. So that's using technical analysis in terms of a methodology for us to get in and out of these markets technically, where we look to firstly identify high probability trading opportunities. Then we'll execute these trades with a high degree of consistency and discipline in our approach. Then our attention shift to our ability to manage these trades effectively. Objective number one for us is to look to mitigate risk, and then what we look to do is to let our winners run. With one aim, and that is to effectively book in profit. So without further ado, if we could start with, before we go into the charts, there's some really volatile moves today, which is good. We'll just start with our risk warning, so please do familiarize yourselves with the risks involved in trading these financial markets. Okay, so before we begin, it is important for us as traders to have an understanding of the news flow. So let's have a quick look at Forex Factory, and as we go through, we've had a positive number impacting the British pound. So we've seen a considerable amount of strength creeping into the British pound today. So we've been able to capitalize on a couple of really good trades. And as we look through the rest of the day, we don't really have an awful lot of eventful news to concern ourselves with. We are facing, I suppose, a number of sort of more significant macro events where obviously Brexit negotiations, there can be a lot of turbulence with regards to the pound and the euro, and we've seen a couple of sort of jitters as well this morning, so that is continuing in the recent vein. We've also got trade talks with the US, and the implications that that can have on the market can be extensive as well. So as far as the news flow, the actual formal news flow, nothing of any major concern. But of course, we do have those macro events which can pop their ugly head up at any moment. So let's move over to the trading charts. We're currently in. We've actually taken profit on a couple of our trades. We've been buying the pound dollar and buying the pound yen. And as you can see, both of these markets have been moving to the upside. But we would like to do something a little bit unusual. We're currently in the New Zealand dollar trade, so we're currently in a bit of profit on that, and we've already booked in profit, a little bit of profit on that trade. So I'll come back to that very shortly. But what I'd like to share with you, and I think it's worth addressing and just making the point that. Yesterday we had a series of, we found was a very, very volatile day, very, very choppy. We were getting moves in certain directions based on correct analysis, and then we were getting really strong pullbacks. But the point I want to make, and we do need to take out this particular trade here because that is through our capital growth webinar, so that's an independent trade. But yesterday, as you can see, we had probably one of the worst trading days we've had for quite a while, where we got into 1, 2, 3, 4, 5, 6, 7, 8 trades, and some of them are kind of break-even trades or a small loss, and a couple of them were the bigger, slightly bigger losses, as you can see. Now, we had slightly an unusual day yesterday in that respect, so it wouldn't be that often where we get into 7 trades and we wouldn't see a winner out of all of those. More to the point, with these 7 trades, we weren't even in a position to mitigate risk on those trades. But people always ask us, what's the secret to trading these financial markets? And really, the answer is actually a lot easier than you would think. When you lose, take small losses. When you win, look to see a multiple of what you lose. So we're talking about positive risk reward. Now, there's lots of traders out there and trading educators that are more than happy to be advocates of negative risk reward ratios. But if you apply a trading strategy to these markets and you have a positive risk reward where it is clearly a multiple of your losses, so we're quite happy taking a number of really small losses. We're not happy about it. Of course, we'd like them to be profitable, but we know it's not always possible. But if we can get into 1 or 2 trades and we see those markets move exponentially, then it puts us in a fantastic position. So yesterday we took 7 losing trades, which again is very unusual, but we did have an unusually choppy market yesterday for the trades that we were looking to get into. So this is very much unusual on a day-to-day basis. But as you can see this morning now, we were able to retrace all of those losses in two individual trades. And the reason for that is when we win, we look to win big or bigger. And when we lose, we look to keep those losses as concise and as small as we possibly can. So I just wanted to start today's session with just explaining that point. Try to adopt an approach where when you win significant multiples of what you effectively lose when you take a losing trade. And that is, I suppose, a significant factor why you or how you will see your P&L grow to the upside over the medium and longer term. So do bear that in mind when you're trading, and we shall make reference to it on quite a number of occasions. So over yesterday's and today's trading, we're currently in a positive P&L over the 2 days, although we've taken 7 losses and at the moment we've just taken 2 winners. Now the other market that we're currently in is the New Zealand dollar. So we'll come back to that in a second. We're okay in this market. If we break these new highs, we can book in a little bit more profit in this. So we got in at the 66.70 level, just above the 66.50, and we've currently booked in profit just at this higher level. But we'd expect this market to continue higher, in which case we can book in more profit on that trade. So far so good on the New Zealand dollar. As far as the what we have seen is a significant amount of dollar weakness creep into these markets, and we were able to obviously benefit on that with regards to the pound dollar. And as you can see, this market is continuing higher. So for those of you that are perhaps in this trade this morning, you can literally just keep sort of pushing the price as this price is moving in our favor. You could literally use the 5-minute low as a little tester to see if you can stay in this market. Now we exited around this kind of level up here. We were experiencing a little bit of a pullback, and now we've got the next leg to the upside. So we would expect a little bit more of a pullback for us to get into this market again. We did have the jitters or the strong flush to the downside, which we've experienced across many markets, especially the pound, if they're reacting to any news events coming out. But as you can see, really strong, explosive price action to the upside. We could and probably should still be in this trade to the upside if it wasn't for I suppose yesterday's trading performance. If you can claw back any losses when you do take some back-to-back losses, do take that opportunity. But most importantly, the erratic nature of the markets fairly recently can instill a little bit of discipline with regards to taking profit. Any profitable trade is a fantastic trade in these markets right now, and obviously we can look for pullbacks to get into this market to continue to the upside, but we're able to get into these markets, capitalize on these moves, book in profit, and retrace yesterday's losses, which is obviously a bonus. And we're actually in positive territory over the 2 days, all in all. So that is that's a good bit of trading. We have the dollar selling off against many of these markets, some more so than others. We're getting the break above the Aussie dollar. Now that was fairly recently, probably on the last sort of 20 minutes or so, 30 minutes, we're seeing a break above this level. We do have a lot of resistance kicking in at these slightly higher levels, and we are in the New Zealand dollar. So it was a choice between the two, and we decided to get into the New Zealand dollar. So we're still in profit on that trade. The euro pound, we were selling this market as well. And this market flushed back really quickly back to our entry price. We got in at around this level, below the weekly low, expecting this market to continue lower. So we were actually looking to take profit at the 88.50, and we did sort of get down to that level, but we had to experience this really volatile spike. So that is again just another reminder to especially in this market condition, these current market conditions, if you're in a position where you can book in profit, go ahead and do so, and don't be remorseful that you didn't get out. You could have stayed in for it for another time, 5, 10, 20 pips, whatever the case may be. That is not necessary. You should really be pleased that you've been able to book in consistent returns on those trades. So the same situation. We're getting these markets just rolling up to the upside. We got out just around these levels, so we were able to capitalize on a nice explosive move up. As you can see, we've rolled over to the downside a little bit, and we've continued higher. So if we were at our trading desk, we might have looked to have got into this market again at these sort of lower prices. So all in all, a couple of really good trades. Now we've got the problem when we look at these markets. Do we like trading these to the upside? Yes, we do. The problem is we're now looking at the range. So this morning we had plenty scope to the upside. Now we're breaking above these highs, and we from a consistency perspective, we now need to ask ourselves, how much more growth are we going to see in this market today, having already booked in some good profits. So if we do get into these trades, we'll be a lot sharper. Maybe get in, make a return, and then look to get out. So we've seen the pound strengthen against the dollar and the yen, and the same situation for the euro. We have currently now seen some really strong day moves in that market. So very well done for those of you that were on these trades. I don't know if Andrew is with us currently. Did you book in profit on those trades, Andrew? I wonder. If you're not on here through our YouTube channel, I think you will be joining us later on through the live trade room. So no problem if not. I'm sure we'll speak shortly. So some really good trades this morning. We're getting the gold market show a little bit of positive move to the upside, but as you can see, for sort of 3-4 weeks now, nothing of any great shakes there with the gold market. The oil, we're kind of coming off these highs, which is obviously what these markets have the potential to do, come off those highs. UK oil as well. So we'll see what's happening with those markets. This is a market that is quite interesting for us. It's not really done an awful lot over the course of the day, and there is scope to the upside in this market. So we can look for opportunities to buy this market. If it pulls back to the 29.16, we might be able to capitalize on a move to the upside. So I would like to come back to this market and see if we get a little bit of a pullback. Maybe we can get into this trade. We've seen some continuation now above yesterday's high. So today now we have these markets moving in, I suppose, relative tandem. These are correlated markets, and we're getting now an impulsive move to the upside in these markets. Same situation for the Dow Jones. They're kind of playing follow-up. So quite a straightforward one. We can wait for a pullback to the 26.468 level and see if we get a nice push to the upside. So we need to wait for the pullback on these two markets. Same situation for this, for the so this one could be a little bit more shallow. We had a really strong flush to the downside yesterday, followed by a really strong reversal. So again, it plays into that kind of choppy environment. And we've had a bit of an extension in the Euro Stoxx 50, a lovely little bounce off this 32.73. And when I say lovely, it's a bit of a nightmare from a trading perspective. We've got 3 or 4 bullish candlesticks, and the rest are just really choppy. And the price action even within these bullish candlesticks hasn't been great. So, we'll definitely look at the US equities and see if we get a strong pullback for us to get into these to the upside. So we'll keep a close eye on that very shortly. As far as the other markets are concerned, we really do have a little bit of an issue now with a really strong we obviously don't necessarily want to be buying the highs now at these kinds of levels. We're more likely to get a little bit of resistance at these levels, just because of the range that we've experienced. Now I think this range is a little bit higher than our current one. So we're talking about 270 pips, and the range we've seen in this one from high to low, is 170, 180 pips approximately. So there is scope for a little bit more in this market to the upside. So what we can do is we can keep an eye on this to the upside. As you can see, it's been a very, very shallow, there hasn't been much opportunity for a pullback trade in this market. It's just kept ticking up to the upside. So really, really strong move to the upside there in the pound yen. The euro pound sort of is giving kind of a mixed picture right now, so we'll take that off the radar. New Zealand is kicking higher once more, which is good. So let's see if we just get let's see what sort of price we'd be aiming for in this market. We can certainly trade the price action a little bit higher. So we'll keep a close eye on this one. So getting a really nice strong move to the upside. Now we can probably mitigate a little bit more risk off the low, which is 66.67. So 67, so just a couple of pips below that level. But we may look to take profit just up at these highs up here if we just get a little squeeze higher. Okay, so that's the New Zealand dollar. So there's definitely dollar strength, and they don't look like they're going to give us an opportunity either to get into them. So we have been looking for opportunities to sell the US dollar recently. We were looking to sell the dollar Swiss. We made some profit on one of these trades to the downside, the dollar CAD, below this level, but we got really choppy price action. This is one of the markets we were selling yesterday. And then, of course, what you often get is the late day moves to the downside. Sorry, the latter day moves that we've been experiencing for the last number of weeks, where you get really strong moves in the latter part of the US trading session. So it's definitely been difficult market conditions, let's say, and we're getting close to this high up here now. So a really strong move on a weekly time frame above the 1733. And a really explosive move in the pound dollar as well, continuing to squeeze up to these highs. Very little sort of natural pullback really in this market. Nothing really to work with in terms of seeing a nice strong pullback, and see if we get the extension to the upside. So we're still in the New Zealand dollar. So let's see if we get a pullback yet in the US equities. Is there anything we can work with at these levels? A little bit tough. So, and a lot of the momentum in these markets are coming from the US dollar. So maybe it is trade war related with the US. Maybe there's a bit of news on the devaluation of the US dollar. Let me see if there's anything on the news lines. So there's definitely some interesting developments with regarding, well, a number of things really. Brexit, Merkel and Macron don't sound optimistic about Brexit. They strike a downbeat tone at an informal summit in Austria. So that flies in the face of, I guess, potentially a strong pound. Certainly a no deal Brexit would be quite traumatic for the British pound to the downside, you would assume. That's the general consensus. So we're clearly getting sort of pre-Brexit moves in the British pound. Be interested to see how that unfolds. Trump presses OPEC to reduce prices as crude trades near $80. So there is clearly a bit of an anxiety around these prices. Certainly the Brent oil market is around the 80 pound level. And the US oil is currently at the $70 level. I suppose it was relatively near the $80 level up here at the 75 US dollar. So the US-China trade war intensifies, so maybe that's why the dollar's moving the way that it is. I might just share with you a little bit of conversation on that just for a few minutes.
Successful at opening up the markets to China, then that'll be great for U.S. companies.
It will slow growth over time. The actual effects will depend on a variety of factors. Of course, we have to make estimates on what we think those are, but it will slow activity.
It almost looks like the tariffs are being averted because they're just coming in through the back door, for lack of a better term. So yes, there's tariffs on China and other places, but you can ship to different parts of the world and then bring it into the United States and avert the tariff and instead just pay the extra shipping costs.
Well, companies have to make business decisions in the midst of all these questions, and one industry caught in the crosshairs now is liquefied natural gas. China currently buys 7% of U.S. LNG exports, but it is the growth market. Joining us now is Sharif Suki. He's chairman and founder of Tellurian. It's an LNG export company and is currently negotiating with 25 partners for its Driftwood LNG project in Louisiana, their way of getting funding to build out their export terminals. Sharif, of course, a long history in the LNG export world. Sharif, great to chat with you. Thanks for joining us.
I do hope you guys can hear this commentary.
Good. So on a company
not,
basis,
do let me know.
You're in talks with 25 companies to get them to invest in Driftwood. Are any of those companies partners still Chinese, and does this change the game?
Yes, there are some Chinese companies in the mix, and you can note that there is a lot of enthusiasm in the last few months. But there is a small piece of the total universe, so it's not a big deal.
So why? I mean, why would Chinese companies still want to sign a long-term contract? Why wouldn't you go more towards European companies, for example, like Cheniere just did?
Well, fundamentally, the Chinese need the gas, and they're going to continue to increase the demand for gas for the foreseeable future.
So we're getting moved,
in spite of all the news and all the the hoopla
So
about Chinese demand.
if you're still in this trade from this morning,
given the massive amount of gas they're going to need,
you might want to consider maybe booking in profit
they
at these
really don't
highs,
have much of a
and
choice. They're playing this
maybe just look to get in at a lower price if you still want to stay in this market to the upside.
Chinese consumption of LNG,
very much up to
supposedly,
yourselves.
but that only affects their customers. It is only going to make LNG more expensive in China. It changes absolutely nothing to the rest of the world.
But longer term, you know, we're looking at the second wave of LNG projects, of which Tellurian is part of. Is it possible, though, that China will now funnel more money into projects, say, in Qatar or Canada or Russia or Australia to secure longer-term supplies from different countries?
I think if they could, they would, but there is not enough gas, and the next wave of natural gas that is going to come on the global market is going to come from the U.S. Fundamentally, you can't change that. We have the cheapest gas on a global basis, with only a couple of places around the world that can compete with us, Russia and Qatar in particular, but for finite amounts. So if you look at the project that I consider very interesting, outside of Qatar, which is kind of a province of the Qataris, it's very hard to get invited down there. But what they've done in Yamal with Novatek is remarkable. So if you add...
Okay, we were just talking about gas there. So, euro dollar, really good trade to the upside. We're obviously focusing on the same trade, but with the pound for the majority of the morning. Now we're at these highs. So the yen is stronger than the dollar, believe it or not. So that should help our New Zealand trade. Hopefully it will continue to squeeze higher. Euro yen, pound yen. I'm just quickly flicking through these. US oil. So with Trump's comments, there's an expectation or pressure for the price of oil to reduce, which flies in the face of OPEC and what they're looking to do, which was prices to push higher. I think there's a general consensus that around the $70 to $80 level is kind of a good place for oil. Now that remains to be seen, whether that's the case or not. UK 100, and yeah, getting a bit of a continuation move in the Euro stocks, but we're getting a pretty clean pullback off the lows. So we'd definitely be interested in the next move to the downside, so we'll have to bear that in mind. Okay, so let's look at the New Zealand dollar then. We currently have this much profit booked into that trade. We'll continue to monitor the pound dollar and the pound yen to the upside. We'll have a look at the New Zealand. And then the other market really for us to look at to see if we get an opportunity is we'll actually put the three equities just one on top of each other. So the S&P, the Dow Jones, and the Nasdaq market there as well. So we'll just have a quick flick through. Okay, so we just need to strive to be a little bit patient with some of these. Will we get a decent enough pullback to get into this market to the long side? Even if we just pick up 10-15 pip profit on those markets, it does remain to be seen a little bit as to whether we'll get that opportunity or not during the session. The problem is the fact that these are range day trades. So let me just let me add or insert average true range indicator. Just work with a 20 period, and we'll flick it to the daily time frame. So you can see really the volatility increased just a little bit in the pound dollar. A lot of that has been quite erratic price action, i.e. breaking higher followed by strong reversals, followed by breaking higher once more. So it's been quite volatile. But as you can see, progressing to the upside as the volatility has increased. So just want to apply that same volatility, average true range. So you can see with the euro dollar that there's kind of a narrowing really, or there's an acceptance about the current volatile levels. Currently 83 pips if we calculate the highs and the lows over the last 20 periods, 20 days, which is a month's worth of trading. We can see that today's high is the 1776 and the low is the 1668. So we're a good 20 pips over the average true range for this market. And let's assess this as well. 105 pips, and I think we're over 170, 180 pips on this one. So yeah, about 170 pips. So we're a good 60, 70 pips above the average true range on this market. So we're way off the higher sort of levels of volatility in these markets, but where we would be getting 159 pips a move per day, we're kind of sort of 40% off these highs. But as you can see, the volatility is picking up a little bit now, so you nearly always get a really strong dip around the summertime, and again around the Christmas period. You're obviously going to see trading levels decrease slightly. So we're in excess of our, let me take that away. So we're completely in excess of our normal sort of daily range if you add up the ranges for the last 20 days. And that's a bit of a concern, because you just got to ask yourself, how much more are we going to get out of this market? The reality is perhaps not an awful lot, but we can continue to look at it on a smaller time frame and see if we do get a bit of a pullback to a previous level of support. We might be able to get into it for another impulse wave to the upside, but we'll that's the nature of that particular trade, if that makes sense. Dollar CAD, Virgin making a double bottom. Aussie dollar, I mean, you can see the improvement in the directional move over the last day or so. In fact, all of the markets, bar none, that we were getting into yesterday, perhaps a couple of the selling, well, one of the US equities we got into yesterday, we were looking for that market to actually continue lower at the time, which completely reversed and is now pushing and looking quite aggressive again to the upside. But all of the other markets that we were in yesterday, we were looking to buy the pound dollar, we're looking to buy the pound yen at much lower prices. We were looking to sell the euro dollar. So we have effectively got a lot of the moves that we were looking to trade yesterday. We just didn't get the price action following suit. So we did today. We got basically kind of, I suppose, what we deserved really today, which was a couple of really strong, nice, profitable trades. So the only market we're still in really is the New Zealand dollar, and let's conduct a similar analysis with this market. The range of this market has not been great for the last few months. So we'll have a look at an average true range in this market. So very small, 53 pips is the range between the normal range between highs and lows over the last 20 days, and we're already 77 pips to the upside. So a significant 30-40% increase on our normal range. So how much more are we going to get in today's move? I suppose our experience would tell us not an awful lot, perhaps. So let's go back to our trade plan for the session, which is so we're seeing the pound dollar and the pound yen just pull back, and this might give us an opportunity to get into it to the upside. Little pullback in the New Zealand dollar as well. So we've already booked in profit on this trade, so we can certainly let it see if we can get another flush to the upside, and then maybe look to take profit around these kinds of highs, somewhere like that. So let's give it the benefit of the doubt and see if we get that opportunity or not. So I'm just looking into some of the news events regarding the devaluation in the US dollar.
the Chinese reaction to this imposition of 10% tariffs so far on $200 billion of imports from China? We heard from the Premier, Li Keqiang. You'll say it better because you're fluent in Mandarin. Overnight.
You're doing well, David.
Overnight, he said that they didn't want to weaponize the yuan. Listen to what he had to say.
China will never go down the path of stimulating exports by devaluing its currency.
Now, you would never question someone's honesty, but do you believe him in this sense? He may mean it right now, but how long can they really stick with that?
Well, I think if you look at what's happened to the yuan in the last 6 months, its valuation against the US dollar and on the cross rates has come down. But not to the extent that it fully compensates for the additional impact on the cost of Chinese goods on the market as a result of US tariff increases. But it will remain effectively not declared as an element of the Chinese, as it were, policy arsenal, quite apart from the retaliatory measures being used against the United States through the Chinese countermeasures announced in the last 24 hours.
Is another possible option to reduce the purchase of U.S. Treasuries? Because we've noticed that their holdings of U.S. Treasury this last month went down. Some people say that might have been in response to this. Some people say it has nothing to do with that. What's your impression, knowing China so well?
Look, my attitude to Chinese holdings of US Treasuries is that China will never do anything contrary to its essential interests. China has an interest, therefore, in making sure that their formidable investment in US Treasuries, which I think is somewhere between $1 and $2 trillion, remains robust in its value. No point in actually exiting out the back door and sending a signal to marketplaces that these things may not be as valuable holdings in the future. That hurts yourself. So I don't think that's part of the policy arsenal at this stage. What you've seen with Chinese holdings of US Treasuries is more of a long-term strategic hedge by diversifying their investment in, let's call it, hard sovereign securities across the world over time, to be less, as it were, dollar-centric in everything that they've got. But I don't think it's part of the policy arsenal to deal with this immediate challenge which presents itself through the trade war.
So you said, and it makes perfect sense, China is going to act in its own best interests.
Yep.
Is the United States
first, second, and third.
There you have it. Is the United States acting, in your opinion, in U.S. companies' best interest right now? I had a discussion with Kevin Hassett just this morning from the White House and said, you know, the United States companies came in, really objected to those tariffs coming in, and they put them on anyway. The U.S.-China Business Council has come out with a survey of its members. We'll show some of the numbers here. That 73% of its members doing business in China really think that this is a problem for them.
Well, I think in terms of China's retaliatory measures, it is. But that, of course, will affect the relative access to the Chinese market of American goods and, in time, frankly, services. But it also, at a deeper level, poisons relationships. If you're doing business on the ground in Beijing, in Shanghai, Chengdu, Xi'an, cities I've been to in the last several weeks, for example, it does have a carryover effect as people in Chinese corporations get the sense that it's problematic to be in long-term business relations with American firms because politics is now coming in over the top of everything. So to answer your question, is the current measures, or are the current measures employed by the US administration, are they in the best interests of American firms? It depends which sector you're in and which industry you are located in. To give President Trump his due, I would simply say this. He has certainly caught the attention of Chinese policymakers big time. To begin with, they thought it was all bluff and bluster. Then we had the first tranche of 35 million. Then the second tranche of another 15 to 16 billion, I should say. And now the third tranche of 200 billion. So there is a big debate in China now about how to land this thing, how to find a pragmatic outcome. But I think we're a ways off yet. The big focus of the meeting of the Chinese leadership at the beach this summer in August was on the US-China relationship and specifically the trade war. How do we manage it? Well,
and so the question depends in part for U.S. business, how long will this go on? And part of that survey also indicated, as you said, it's not just tariffs going to affect, it's reduction in investment. It's problem with supply chains being disrupted. There's a range of issues that can help U.S. companies. How long can we afford to have that pain as a practical matter?
I can't speak on behalf of US firms. That's impertinent on my behalf. But what I can give you a sense of is where I think this thing goes in terms of resolution timetables. I think it's highly unlikely we're going to see any significant move to resolve this thing this side of the midterms due on the 6th of November. There's a reason for that on the Chinese side. They want to know, one, are they dealing with a stronger or a weaker US president? Two, what will be the shape of the Congress and its attitude to China? And three, will the president be making any key changes in his administration, key personnel decisions which affect the US-China relationship? So the mood in Beijing is, let's just hang back and let's just wait to see what happens. And secondly, the Chinese attitude is, we need to be confident that there is a unified position within the administration, because in our attempts to resolve this so far, American delegations to Beijing, Chinese delegations to Washington,
as we look at these markets,
both have floundered at the end of the day because there was fundamental disagreement within the economic team in the White House as to what the final American, as it were, negotiating position is. So what's my prediction? I don't think we're going to see substantial movement on the resolution of this until much closer to Christmas.
What sort of larger effect on global trade flows is this likely to have? Will it actually reduce the growth in global trade, which has been fairly consistent since World War II, frankly?
If the measures are now being embraced by China and the United States begin to affect radically global supply chains, then it is potentially disruptive. Often in the United States, it's judged, for example, that China has a limited policy arsenal for a very simple, practical reason. China currently exports $500 billion per year to the United States. The United States currently exports about $140 billion, $150 billion to China. Therefore, whatever measures the Chinese impose on American exports is not going to match quantitatively the impact that American measures on Chinese exports to the United States. But here's the rub. If the Chinese get backed further into a corner, one of the measures in the Chinese policy toolkit is for China to begin considering the taxation of, shall we say, American componentry in the global supply chain before that final good lands in the Chinese market. Now, if that was the case, and they imposed 10 or 25% on that, but then signaled to other global suppliers that we're going to give you 6 to 12 months to alternatively source that, that not only punishes America at a much bigger scale, but then begins to really slow global trade.
And take a longer term view, because you just recently wrote an op-ed in the...
Okay, interesting. I do hope you could hear that. So yeah, it's just interesting to see how the dynamics of the whole trade war developments may or may not unfold, and the implications that has on global growth. So definitely interesting times over the coming months. We also have the midterm elections as well in the US, again likely to provide a lot of volatility. So certainly the dollar is selling off quite considerably against a number of these markets recently. So that may very well, we were hoping to see a little bit of a pullback to see if we could get into these equity markets, so we might need to be a little bit more patient with these. Now we've got an interesting situation. So we've had a little bit of a pullback to these lows. So we've had a 20 pip pullback in both of these. Now it's going to be interesting to see if this level holds now, the 32.75 or the 148.81, and if this level breaks, then we would certainly be advocates of, if you're still in these trades, this will be a structural failure to the downside. However, we've got every opportunity that this may still continue to the upside, so we want to sort of weigh up the pros and cons. We are exactly at the 149.100 level, so likely to provide a little bit of resistance as well. So and this is effectively the 133 level, which is these highs up here, 1 32.97, so only a couple of pips away. And the other markets we're looking at is the S&P, the Dow Jones and the Nasdaq, and all of these markets. What we would like to see is a nice strong pullback on these if we can. If we're able to see these markets pull back to these levels, it might give us a really good opportunity to get into these markets from these lower prices. Same situation across the board really with the Nasdaq and the Dow Jones. We have our stop loss just placed beneath this level, so this high now becomes quite important. This is currently just a pullback. So will we see these markets push up to these levels again? I'm not so sure, but we shall obviously try and wait. We might actually wait and see, and I'm very conscious of the time, guys, so we do have our traders over at the live trade room now, so we're going to switch rooms. We're going to move from our YouTube channel over to our trading room at the live trade room. So we would like to extend an invitation to any of you that would like to join us. Please do see the information below. The description details are below. We're currently offering a 2-week free trial, so you can test. You can join our live trade rooms for 2 weeks completely free of charge with no obligation. And then if you decide to join us, the fee is just $9.99 per calendar month. So hopefully you'll find that hugely rewarding for you and great value. So do have a look through the details below. So we might have to switch across, guys. We could be getting a structural failure to the downside now against the pound pairs. The New Zealand dollar, we're going to continue in this. This could create a bit of a support of price in this particular situation. So let's see if we get another impulse to the upside. And with the US equities, we really do need to wait for these markets to pull back so we can take them to the upside once more. So all in all, a fairly decent day today trading these financial markets over the morning session. If you'd like to, please do subscribe to our channel below or click the bell and you'll be notified when we go live. And we'll also, you can connect with us through our YouTube, Instagram, Twitter and LinkedIn as well. So thank you very much for joining us. Do take care. We hope to see you over at the live trade room. If you click on the link, you can join us to get instant access and we'll get you set up straight away. So from everyone here at the live trade room, thanks very much. Do take care and we'll speak to you soon. Bye for now.